Hello everyone, I'm here with you with another topic today on Forex technical analysis. So let's see what topic we have for today. Okay, today we are going to talk about trend lines. What are trend lines in Forex? Okay, trend lines are actually diagonal lines above and below the price movement on the price chart. So when you look at the price chart on your trading platform, so these are actually the diagonal lines above and below the price movement. Trend lines are also considered diagonal support and resistance levels on the price chart. They are also used in conjunction with horizontal support and resistance levels to determine the confluence area where the price has high probabilities to make a turn or take another direction. So in upward trend lines are drawn below the price action in uptrend, and then in downtrend, trend lines are drawn above the price action in downtrend. So just like horizontal support and resistance levels, if there are 3 or more touches, then it makes a strong trend line. So some facts about trend lines in Forex trading. Trend lines are considered the most common form of technical analysis. But at the same time, it also shows that trend lines are one of the most underutilized ones as well. So either forex traders don't get much knowledge about trend lines, or they don't know how to use trend lines. So that's why they are considered underutilized. Number three, if trend lines are drawn and applied correctly, then they can be as good as any other method of making profitable trades. Okay. And number four, traders need a bit of experience and practice to draw trend lines. But unfortunately, most of the forex traders are unable to draw them correctly. So that's why these are underutilized. So traders need to do a bit of practice and get some experience of actually drawing the trend lines and then using them according to their trade. So this is how we draw the trend lines in their most basic form. An uptrend line is drawn along the bottom of easily identifiable support areas or valleys. So this is where the blue line is. So when the price is moving upward in an upward direction or a bullish price, then the trend line is drawn on the bottom of the price, which are also called valleys, and this is also known as ascending trending value. On the other hand, we have a downtrend resistance, downtrend line. We see the price is moving down, is a bearish market, and then we draw the trend line actually on top of the where the price has gone to the maximum. So we try to connect all these top peaks. So in downtrend, the trend line is drawn along the top of easily identifiable resistance areas or peaks, as I just mentioned. And this is also known as descending trend line. So how to draw trend lines? As I just discussed in my previous slide, to draw forex trend lines properly, all you have to do is to locate two major tops or bottoms and then connect them through a straight line, which is actually a diagonal straight line. So this is how it looks like. You can see there's a price chart. So this is where the uptrend is, the blue line that you see. It is connecting few dots, and then this is the downtrend with the red line. So it's connecting one here and then connecting one here. Then this is the sideways, and this is again uptrend, a blue line. So see, this is where the connection points are, here, here, and then here, and then it makes a good uptrend trend line, and then over there downtrend in the same way. So there are three type of trend lines: uptrend, downtrend, and sideways. We have just seen them. So how we look at uptrend? So we have in upward trend, we have higher high and higher lows. So this is where we identify them, that is an upward trend or upward trend line, and downward trend line where the price is moving down, and then we see that it's a downward, or where it makes lower high lower lows. So this is how we can identify them as upward trend lines and downward trend lines. And in the same way, we have sideways, where the market is ranging between two price points, high and low. So you can see this is one level and this is another level, and from here the price breaks the lower level and it goes into the next level and it makes another ranging price over here. So you can see on the actual chart how it looks like. So some things to remember about using trend lines. It takes at least two tops or bottoms to draw a valid trend line, but it takes three to confirm a trend line. So if you have 2 points where you can connect them, so it means you have a trend line. And if you have another one in like a third one, then it means it's a definite trend line. The steeper the trend line you draw, the less reliable it is going to be and the more likely that it will break. Like horizontal support and resistance levels, trend lines become stronger the more times they are tested. And most importantly, do not ever draw trend lines by forcing them to fit the market. If they do not fit right, then that trend line is not a valid one. So you don't have to try to just fit them. If the points are touching the line, then it's a trend line. Otherwise, it should not be considered a trend line, and don't base your analysis and take a position on that. So with this, that's it, guys. I hope you like the video. I will see you next time. You have a good day. Bye bye.